All right, guys, welcome. I'm excited to have you guys on this particular call. And yeah, this particular video, we're talking about entries. All right. This has been one of the issues of so many traders. How do I get in? How do I get in? How do I get in? All right. You have come to the right video. Right here, we're talking about only entries, nothing again, right? I've given you guys the one fits all method of trading, or one fits all method of entries, right? Be it synthetic indices, currency pairs, stocks, futures, whatever you use, this entry model will work for you. All right. What I would like you guys to do after watching this video, open your chart and backtest this information that I'll be giving to you guys as we progress. Right. So what is this? We're talking about the ICT optimal trade entry. All right. Something I learned from the inner circle trader, and I'm able to add one or two things to make it more effective for my usage, right? And I use this only for the lower time frame for my entries, right? So the Ict Ote, right? Talk about the Ict optimal trade entry, right? So talking about in this particular video, and it's gonna be lit, man. It's gonna be lit. Sorry. All right. So now, first things first. I want to show you guys a trade I took, because I don't want to be giving bullshit bullshit talks, right? I want to give you guys real trades I took, and I want to show you guys how before and after I took it. All right, so let me show you guys the picture of the first trade I took. All right, so you should be able to see my screen now. All right, so this was a trade I took on the Euro GBP. You can see the trade. You can see, okay, this is after. Let me just go quickly to the before. Sorry. Let me just go before. So you guys can see I actually called out the trade before it happened. All right, so you guys can see the trade. This was actually on my paid mentorship group. But you can see that the market was coming down to my POI. You can see how price came in. I kind of told them that if you like ICT, entry can be at 62%. You can see I entered. I gave the indication before the trade I did my short, and then you can also see after the trade played out how it played out rather handsomely. Right, it was a very amazing trade. Right, let me quickly share after it played out. So this is it after it played out. Right, I can see how the market it came nicely, activated me, and moved to my take profit. So this is a trade I want to explain with this information I'm about to give you guys. Right. So if you want to be part of our pay mentorship group, where I can give you real-time information, I don't give signals. I just tell you guys what I'm looking at the market, and you can do that with it. You can do with that whatever information you want. Right, so you can be able to meet me real time, talk to me real time. We discuss trade ideas, all of other sponsors. That's only possible through the paid mentorship group, right? And of course, you can always join my free Telegram community, where I also give what I'm looking at the market, but I give more attention to the paid group, because those are the people that are actually going the step further to be part of what I'm doing, right? So the free stuff, I don't really feel too much obligated to do that. But if you're in a pay mentorship group, I feel more obligated to reach out to them. This is what I'm looking at, all of those sponsors, right? So let us go into the meat of the matter, right? So now, this is a trade pattern that you can use on whatever asset class you're trading, will it be the stocks, indices, whatever you trade, right? It's something that works on all of this, right? So now, basically, ICT optimal trade entry is simply a measurement of the FIB2, right? Now, I will give you guys an example, right? Let me go to the daily time frame so it's easier for me to type, right? Let's take this up. Now, when you're talking about ICT optimal trade entry, you're simply looking at, this for a bullish scenario. If you're bullish, very simple, right? It's just a very simple pattern you need to spot on the lower time frame. All right, so if you're bullish, you want to see one time, put on a very scenario at the left side or the right side, right? This is a very scenario now. I want you guys to just understand the easy approach to it, right? Now, if you're bullish, you know that, let's assume that you're bullish. Now, the bullish OT simply means that the market goes high and displaces higher, right? What you want to do is simply do what? To bring out a Fibonacci tool, you draw from the swing high to the swing low, right? And then you are looking at entering your trade at the 62% level. This is your entry areas between 62% to 79. Right? Those are your Ict Ote levels between 62 to 79, right? So you simply bring up Fibonacci to, you come to the settings, and then you put in 62%, 79, and then yeah, yeah, 71. But I like to put 62 to 79. That's all you're looking at for, and then you put OK, right? And then you want to also insert the minus 0.27 level. That is where you'll be getting your profit targets, right? So there's a profit target for this simple model I'm giving you guys, right? So that's all you're looking at for this. So now, when you see this, you simply do what? You place your limits at the 60% level. Stop loss should be where? Below the 100. Very easy model. It's not difficult. Just very easy entry model, right? No, it's not letting me do this below here, right? And then your takeover should be where? At this minus 0.27 level. You can say this is roughly one. Okay, let me put it nicely. It's roughly 1 to 2 RR trade. Very easy. Very easy trading model, right? It's roughly 1 to 2.2, right? I'm not very correct with this. So your entry should be at the 60% level, stop loss below the 100, and then you're targeting what? The 0.27 level for your take profit. And usually it 1 to 2.2, right? I think it's really accurate, yeah? So it's only 1 to 2.2 trade. That's what basically what it gives you, right? And is the reverse for a bearish scenario, right? Very, very easy entry model. So market is giving you a bearish structure, and then you simply do what? You draw your fib2 from here, your swing high, your swing below, right? And your entry should be what? At the 62% level. That's where that's the best entry, right? To have a better risk reward, you can go for 70 or 79, but the best, the best scenario to avoid the issues where market does not fail you in, unless you have other confluences, you simply do what? You simply put the limit at what? The 60% level. Very easy, not much of a rocket science. 60%, and then your stop loss should be at the 100, right? That's all. This is all you're doing, right? Simply put simply put your limit at the 60% level, right? When price comes back, you put the limit at the 60% level, right? Your stop loss were at 100, and then you're targeting what? The minus 0.27 level. That is all you are doing. That is 60%, right? 60% level. This is all it is. And note that you want to be using the 5 or 15 minutes time frame for this. Since it's for entries, because between the 5 to 30 minutes time frame. But so, but the 15 minutes is very, very nice for this, right? The 15 minutes is very, very preferred, right? It's most preferred. Right? This is basically what they're doing on the lower time frame, right? This is what they're doing. This is all they're looking at for. You simply plot your Fibonacci level and go for 60% level, your take profit level at 0.27 level, right? This is just the standard approach to it, right? And we got just the standard approach, right? If maybe you have an imbalance, maybe you have something that makes you feel the price might go deeper, then you can just see that the best case scenario where this is just the exact model. It goes minimum of 1 to 2 RR, right? That is the minimum, right? That's what we're doing with this trade model. Now, we have prerequisites to this, right? We are not just looking for trades, looking for 60% level. You have to have other confluences. And the other confluences we're talking about, we're looking at, you're looking about the structure of the markets. You have to have the bias, and you have to have what? The higher time frame PY, right? So the 3 things you have to have to do this, right? These are the 3 things that you must also add in confluence. And then you prefer what? You have to be in the New York or London session, right? This is basically when this thing works the best, in the New York or London session, right? And most preferably the New York session. So you have to have all this in mind. That means the market has to be what? Structurally bullish. If you're bullish, you have to have your daily bias has to be bullish. You have to have your higher time frame PY, meaning that you are not looking at this thing at any area, right? This must occur where at your higher time frame point of interest, right? So this is what you're looking at for. This is all you're looking at for, right? So let's just take this back a bit. So now, let's assume that maybe you have a bearish market, right? Market gave us a bearish break of structure, and then maybe have this other block as an area of interest, have this other block as a PY, right? Now, when price comes back inside your POI, right, and then it gives you what? That's lower time frame what? Break. Now, this is where you can look out for what? This entry, this sell scenario, right? This bearish scenario, this. You can look at this when price does this inside your POI, right? You must have a higher time frame reason to go what? Short. You must have a higher time frame reason to do what? To go short. Not that you're just looking at for this on the lower time frame low. You must have a higher time frame reason. If it's an order block, an imbalance, or a breaker block, whatever you use, you must have a higher time frame reason to go short. And when price does this, you can simply then bring out what? If you wanted to draw from swing high to swing low, and simply to what? To limit that was the 2% level. Very easy. I'll show you guys the higher time frame approach. So you must have a higher time frame reason to do this. Not that you look at also a lower time frame, just a random lower time frame, right? You must have a higher time frame reason to do this, all right? And that's all you're looking for, right? So now, how did I get my trade on EJ, which I posted it on my paid group before I took it, and some of them actually took the trade and they made money from it, right? So this is one thing you must. That is one of the benefits of being on my paid group, where I can teach you guys, I can show you guys what I'm looking at before it happens, and we have tremendous results. Just we have had so many proper accounts pass. We even have a trader that has $115,000 profit account, and he has been trading since 2017. Because when he joined us, and he saw the light. Right? So we have a lot of results, students passing challenges, all of this fun stuff. And the best part is we don't give signals. Right? We teach you how to be independent on your own. That is my approach of mentorship. Right? I don't give signals. I don't give entry or exit. I just teach you guys how to do this on your own, right? And in rare cases, I can show you guys what I'm looking at on the lower time frame, right? So now, how did I get my EJ trade? So let's go to my EJ trade. Now let's go to EJ. Now, this was the day I took. This was yesterday, Friday. So now, how did I get my EJ trade? Now, look very carefully. The market was, we have liquidity here, we have this relative highs here, liquidity above here. And now what do we have here? We have what? A bullish break of structure. So I have a bullish break of structure here. And of course, I posted this on my paid group. So I posted this on my paid group. I told them why I was looking for the buy. That's why you have to join the paid group if you're not there. It's very, very beautiful. We are helping traders to make a lot of fits in the market. That's why you have to join the paid group if you're any part of it. You just go for 45,000 naira for 1 full year. No monthly subscription, just a year, 45,000 naira only. Right? So now this was the setup we're looking at. We had what? This bullish breaker block. So this was a bullish breaker block. I was looking at the open of the candle to this point, right? This is my bullish breaker, right? The open of the candle to the higher week. That was my bullish breaker I was looking at. Why is it a breaker? Because why? It took out was liquidity to the downside, right? So liquidity to the downside before it was giving another bullish break, right? So we had a bullish break of social plus that breaker. And not only that, we had was a bullish imbalance. We had an imbalance between here and here, right? Because I'm using a higher time frame to frame this up. So you had this higher time frame imbalance. So you had this imbalance here between this candle and this candle. So you had this imbalance here. So you can see that we had two reasons to do what to go long. So we had this bullish break of structure. We had this breaker block. We had this liquidity to the upside, and then we also have this liquidity here, right? We have this liquidity here this week. This is also liquidity because people are going short. So all these liquidity targets sponsoring was the bearish idea. So price came below here. So now simple was the lower time frame, right? It was the lower time frame trade I took, right? So this was it. So look at it. Now, on the lower time frame, price came to us. That's our PUI there. Came to our imbalance and our breaker. What did I see? Number one, we had our Asian low taken out. And on the lower time frame, what do we have here? We had our bullish break of structure. So this was where I took the trade. It was here. Where I put the trade I did my pay students. Market was somewhere around there. Look at it. So it was the market formed this during was the New York Hill zone. So you can see that this formed during the New York Hill zone. You can see it's formed during the New York Hill zone. This setup formed during the New York Hill zone, right? Or London zone. 8cap has an issue with time, right? So let me just check what time was this. So okay, it formed during the London Hill zone. That was on this idea formed during the London Hill zone, which is what. Let me take this off so you guys can get a better read for price. Sorry. So London Hill zone happens between 2 to 5 o'clock New York time. So let's just mark that up. So this was between 2 to 5. So our Q zone lining up perfectly. The market formed this setup by Q zone between 2 to 5 London New York time. So we had this. So we had our lower time frame confirmation now. So this is the lower time frame now. I told you guys that you want to use the higher time frame for your POI and then lower time frame for your entry, right? So now I simply did what? I brought out my Fibonacci tool. I drew from swing high to swing low, all right? And my limit was where? At the 62% level. That was why I put my limit entry, and I was, targeting what I told you guys about. I'm targeting 0.27 for my take profit. That's why I got my limit here, all right? My limit was here, and my TP was here. Let's just put it in the limit so you guys can get a feel for price. And so this was my limit, right? My limit was there. Suppose was below here, and I was targeting what? 0.7 of my take profits. That was what I was targeting on my take profits. And did it happen? Yes. Surprise! You can see sniper entry, right? Imagine that you are going for 70.5 or 79. You would have missed this trade idea. The side markets came here perfectly, and then where did you go for? Straight for my what? Take profit at what? Minus 0.27. This was 1 to 2.23 for me. It was very beautiful, very clean setup. And I've showed you guys how I spotted it before it happened. I'm not showing you guys what happened after. I showed you guys how I called it out before the trade idea. So for a paid student, do well to confirm if I posted this before it happened. So if you're a paid student, please do well to clear the air, because some people always post share the pick trades. But me, I don't do that. I am driven by knowledge, and I spot things before they happen. So if you're a paid student, do well to comment on this channel that I actually called this before it happened. So those who are that can believe I actually called it out before it happened, right? So it was a very beautiful trade idea. So let you guys to back test on this idea. You can see this hit my 0.2 level. You can see they collapse back, and you can see how it dropped, right? So this is the simple approach you can use for trading on whatever asset you trade, or whatever trade at all, right? Don't simply do well to back test this on synthetic indices, whatever you trade, right? So if you want to be part of our payment strategy group, you can do what to join with the link in the description. That's a yearly payment, and you can be part of us, right? So I hope this video was insightful. I hope you guys taught you guys one or two things, right? So see you guys in the next video. Have a wonderful day. Cheers and God bless.